Good evening, everyone. Time for another silver update. This is the hourly chart of silver provided by netdania.com. You can click on the link below. I've drawn the primary downtrend line. We're meandering here. This is the holiday, so not real trading. It's probably going to come back or Sunday night when it opens up. A couple of support lines here. One seems to be a key line that we're at, which was kind of a bottom here, a breakout bottom, and then it showed some support here, and we broke down through it, and now we're testing it. The lower line here is going to be what we just broke down through, and down we just touched 31. $30 is going to be a real key level. There are a lot of people that are watching $30. A lot of people have predicted that we're never going to see a price below $30. I have my doubts about that. But if we do get below $30, we may see some really good stacking opportunities. I think there's a lot of people out there waiting for an opportunity to stack at a low price. I think more so every day. If you think about the price of 30, that's a billion ounces of silver at 30 is $30 billion. That's just a rounding error in the type of debts that we're running up, and even in the interest that's generated on that debt. So a billion ounces of silver is a lot of silver. We showed you last night the Silver Institute shows that what's actually coming out of the mines is only about 750 million ounces. There's and someone asked a question about why do the supply and demand always match? Well, because they balance them, and they balance them through some very questionable ways, but we're not going to go into that tonight. But again, $30 is $30 billion. 10 billion ounces of silver at that price is only $300 billion. I don't think that they could come up with 10 billion ounces of silver in the next 10 years. There's just so much used by industry, so much being lost because the price is too low. So an excellent price to stack at, inflation adjusted. My guess is it's probably 80% below the all-time high. So silver is still dirt cheap in my opinion, and the only way to get it is to stack it, because as we'll see in the main story of the night, the rest of it isn't even real. I want to jump over to the viewer question of the day. This is from Fee's Place. QE, Brother John F. What are the chances that a massive QE waits until after the election, then the lid pops off the cartel/Fed, and they can't hold gold, silver down any longer? As a 14-month stacker of silver, I wouldn't mind another 6 months to stack. Well, you might just get that. A lot of people are projecting that we won't see, David Morgan is one, projecting that we won't really see a serious rise until next fall. You have to remember quantitative easing. This terminology that they use is disingenuous at best, because it's not easing. The traditional tool bag of the Federal Reserve has always been the lowering of interest rates, and that's what the term easing means. Now, obviously on the short term, the short end of the yield curve, there's no easing left to be done because they've pegged rates at 0. So we're effectively talking about 0% interest rates at the 3-month, 6-month, 9-month T-bills, and nearly the 0 at the 1, 2, 3, even the 5-year Treasury. So they've pretty much done all they can do on the short end of the yield curve. Now, they had quantitative easing 1 and 2, which is just another term for printing money. The latest operation by the Fed is called Operation Twist. Now, this is really just an attempt to lower long-term rates, and it just amounts to the Federal Reserve buying long-term treasuries, specifically the 10-year note. So the Fed's forced down short-term rates. They're in the process of forcing down long-term rates, and once they've forced down long-term rates, there isn't going to be much left to do but print more money, and that's probably going to come. The Fed is using its bag of tricks to keep the deflation scare scenario. They always have to keep the market thinking that they might not print more money, and that keeps investors on guard or off guard. It keeps them off balance, so they don't really know what the Fed's going to do. I really don't think there's any question that the Fed is going to print more money. That's all the Fed can do. That's all they've ever done, and that's going to be very bullish for gold and silver. Now, before I take you over to the story of the night, which is on Silver Doctors, I want to show you I do have a ad here for Silver Doctor's site. It's SD Bullion, and you can click this banner on my blog to get there, and he's offering a $10 off, and there's a promo code for me. So go over and check him out. I've heard nothing but good things about SD Bullion. Hopefully he can grow, and I hear he's got really good prices from the people who've bought from him, so good for him. And I wanted to go over to Silver Doctors for the main story, and this is going to be about Blythe Masters, and she has just given an interview recently, and it's kind of interesting that they found the need to come out and address the issue that JP Morgan is involved in the manipulation of markets. And Silver Doctors has kind of an interesting take on this, so I'm going to read some of this to you. As by now all of our readers are aware, JP Morgan's global head of commodities, Blythe Masters, yesterday appeared on CNBC for a softball interview, giving Ms. Masters the opportunity to deny rumors and allegations that JP Morgan is manipulating the metals markets, particularly silver. With a smirk on her face, and I will call her Blythe, she doesn't seem too concerned. With a smirk on her face, Blythe informed viewers that JP Morgan's commodities business is not about betting on commodities, it's about assisting clients. And we have offsetting positions. Manipulation is not part of our business model. It would be wrong, and we don't do it. While Blythe's statements have already been thoroughly dissected and ridiculed ad nauseum, the doc concluded, the fact is that Blythe was not lying through her teeth as many claim. She was telling the truth 100%. Here's why. As our friends at GATA have long alleged, it's highly likely that JP Morgan's client referred to by Blythe Masters is none other than the Federal Reserve, specifically the New York Fed. If you remember my recent video, I also asserted that it's the Fed, stupid. So I agree that it's the Fed that's behind it. Viewed in this light, Blythe's comments regarding gold and silver manipulation are completely honest. While obviously intentionally misleading, nonetheless they are honest at face value. It is likely that JP Morgan is maintaining metals positions and trades per the instructions and wishes of their client, the New York Fed. Now I want to point out here that if it's true, now she may have been referring to the bullion banks, or she may in fact be referring to the New York Fed. Regardless of who she's referring to, I would like to know how Blythe's clients have a one-way position on silver when they don't have any silver. What's their interest? Are they representing miners? Do they have big stacks of bullion that they're unloading, and they just have so much bullion that they have to get rid of, that they have to get JP Morgan to go in there and sell it for them? Well, that's just patently absurd. We know that the Fed doesn't have any silver, and we know that the bullion banks have very, very little silver. So it's pretty clear on its face that the positions, or the, as she says, the clients that she's assisting, well, they're manipulators. They aren't silver sellers or anybody who has a real interest in silver. Recall the rumors in the market that a central bank gave orders to dump 1 million ounces of gold on the market in the span of 2 minutes on February 29th. Recall that gold and silver were taken down massively and counterintuitively last fall, exactly 5 minutes prior to the Swiss franc's devaluation versus the euro. Recall that gold and silver are routinely smashed whenever the Federal Reserve Chairman is speaking publicly or the FOMC is meeting. The plunge protection team's New York Fed's Brian Sack, who was sacked this week, another story, routinely uses broker-dealers to conduct open market operations to fund the Treasury's Ponzi, i.e. the New York Fed makes agreements to handsomely reward the primary dealers for taking up Treasury auctions with the full knowledge that the New York Fed will buy back the bonds at a premium in approximately a week's time. Would Goldman and JP Morgan be buying $1.5 trillion worth of treasuries annually at 2.5% if they had to hold them on their own books for 30 years? Of course not. Why should we believe that the New York Fed's intervention in the commodities sector is any different? Someone has to execute the trades on behalf of the New York Fed's commodities intervention. It makes perfect sense that JP Morgan holds their massive naked short gold and silver positions on behalf of their client, the New York Fed, and not as their own speculative bet. If JP Morgan held these positions on their own behalf, the CFTC would likely not be in their 4th year of investigating silver manipulation. The DOJ would be involved, and let's just say that Blythe would not be making charity appearances donating millions of dollars to community colleges in Colorado. Unlike JP Morgan, the Federal Reserve would have a variety of motives in suppressing the gold and silver price, managing the metals markets with an iron fist, and ensuring the metals are smashed upon any significant macroeconomic news intuitively harmful to fiat currencies. Gold and silver are anathema to central bankers who make their living by sucking the value out of the population's currency through inflation and currency devaluation. The Federal Reserve has every motive to ensure that this process can continue unnoticed by the masses until the wealth transfer is complete. Imagine if the American people en masse became wise to the scheme and began saving their wealth in gold and silver rather than Federal Reserve notes, which the New York Fed can run off by the trillion with a simple keystroke. The entire con would be up overnight. Gold and silver must be managed and controlled by the Fed until the wealth transfer is complete, at which time they will be revalued higher. Ben Bernanke has already informed us of this exact plan back in his famous helicopter speech. Gold revaluation is the end game, but until then, it is management, suppression, and intervention. When Blythe Masters yesterday claimed that JP Morgan holds their metals position on the behalf of clients and that JP Morgan is not in the business of betting on commodities and that they are not running a large directional position, she was likely telling the truth. Doc. So that's excellent analysis. I agree that JP Morgan and Blythe Masters are acting at the behest of their masters, which are the Federal Reserve banks and specifically the New York Fed. So back to silver. Silver is far better than gold as far as ending the manipulation because silver is such a small market. Like I said, $30 billion is enough money to send the silver market into a panic if that $30 billion was actually used to take delivery of physical silver, and $30 billion is just a pittance. So while we're down around near 30, we all want to stack. If you get the chance, go ahead and check out SD Bullion over at Silver Doctors, and we'll talk to you next time.